What if the biggest financial story of the year isn't happening on Wall Street, but in a quiet negotiating room in Vienna? A potential US-Iran peace deal sounds like a foreign policy headline. But the truth is, it's a master lever that could dictate the price you pay for gas, the value of your savings, and the balance of global power practically overnight. The mainstream news will show you the handshakes. We're here to show you the money. The story you'll see on the news is straightforward, even noble. After years of tension and crippling economic sanctions, diplomats are discussing a path to peace. The framework is simple. Iran curbs its nuclear ambitions, and in return, the United States and its allies lift the sanctions that have strangled its economy. The goal, we're told, is global security, preventing nuclear proliferation and a triumph of diplomacy over conflict. It's a clean narrative. A dangerous regime is brought back into the international community, and the world becomes a slightly safer place. On the surface, this is a win for everyone. But in the world of global finance, the surface story is never the real story. The real story isn't about weapons. It's about the one commodity that has dictated global power for over a century: oil. To understand what's really happening, you have to look past the political theater and follow the barrels. Iran sits on the world's fourth largest proven crude oil reserves. We're talking about nearly 160 billion barrels of black gold. For years, sanctions have acted as a tourniquet, keeping millions of barrels of Iranian oil off the global market each day. A peace deal wouldn't just loosen that tourniquet, it would rip it off entirely. Estimates suggest Iran could ramp up production and add between 1 to 2 million barrels of oil per day back into the global supply within months. In a tightly balanced market, that is a tsunami. This isn't a small adjustment, it's a fundamental shock to the global energy equation. While politicians talk about nuclear inspectors, energy traders and Wall Street analysts are modeling the impact of this new supply. A sudden glut of oil forces prices down. It's simple supply and demand. But the implications are anything but simple. This is where we move from economics to the hidden architecture of power. The deal isn't just about the quantity of oil, but the currency it's sold in. For 50 years, the global financial system has rested on a secret agreement, the petrodollar system. The deal was that major oil producers, like Saudi Arabia, would sell their oil exclusively in US dollars. This created a massive, artificial global demand for dollars, cementing America's role as the world's reserve currency and funding its deficits. But Iran, isolated by sanctions, has been actively working with rivals like China and Russia to build systems to sell its oil outside the dollar system. A peace deal legitimizes Iran on the world stage. What happens if a newly unsanctioned Iran, flush with oil, decides to sell Hajm Kabir of it to China for yuan, or to India for rupees? Every barrel sold in a currency other than the dollar is a small crack in the foundation of the petrodollar system. This isn't just a commercial transaction, it's a geopolitical power play. For the US, a deal offers a way to lower domestic gas prices and combat inflation, a huge political win. But the long-term cost could be a slow erosion of the dollar's dominance, the very thing that underpins American economic power. It's a high-stakes trade-off. So, how does this high-level chess game affect your life? The impacts are direct and personal. First, your gas tank. The most immediate effect of Iranian oil returning to the market would likely be a significant drop in gasoline prices. This eases the financial pressure on millions of households. Second, your investments. A sustained drop in oil prices would hurt the profitability of major energy companies like Exxon, Shell, and Chevron. Their stock prices would likely fall. Conversely, industries that are heavy energy consumers, like airlines and manufacturing, would see their costs drop and their profits rise. Defense contractor stocks might also dip, as a peaceful resolution reduces the perceived need for military hardware in the region. And third, the long game, the value of your money. While a cheaper tank of gas feels good today, a weakening of the petrodollar system over the next decade means the US dollar in your savings account buys less internationally. It means the US government has a harder time financing its debt. The deal forces a choice: short-term relief at the pump versus the long-term stability of the financial system we've known for generations. It's a choice that will be made in quiet rooms, far from public view, but its consequences will land right in your wallet. So, a US-Iran deal is never just about peace. It's a calculated financial maneuver disguised as diplomacy. It uses the flow of oil to manage inflation, to challenge geopolitical rivals, and to subtly reshape the global currency system. The mainstream media reports on the handshakes and the treaties, but the real story is written in the cold, hard logic of supply, demand, and the fight for currency supremacy. If this video opened your eyes, hit the subscribe button and the bell icon so you never miss an episode. We release new videos every week, decoding the systems that control our world. Next week, we're investigating the everything bubble and what the insiders are doing to prepare for it. Now you see how the money really moves. Money Decoded.